Hey, welcome to the channel. My name's Phil and this is Grow Your Dough. In today's video, I'm going to be showing you how I can use factor-based investing tools to build a portfolio of 20 stocks in under an hour. I'm going to be focusing on the UK market today, and I'm going to be using a high flyer approach, which uses high quality companies and high momentum companies. So let's crack on with it. In my previous video, How to Pick Winning Shares for Beginners, which I'm linking to up above, I demonstrated how you can use a factor-based approach to analyze companies without needing to know a lot about businesses or finance or accountancy. I also highlighted which approaches work best for different countries around the world. And in the case of the UK market, the approaches that work best were a high flyer approach, which is selecting companies which exhibit high quality and high momentum, and also turnarounds, companies that were inexpensive and exhibiting good momentum. In today's video, I'm going to follow through on that process now by going through the whole process of screening, allocation, and purchase of 20 stocks using a high flyer screening strategy. And to prove that I can do it in under an hour, I'm going to show you a clock at the beginning and at the end, and I'll speed the whole process up and do it all in one take. So hopefully you can see right from the beginning to the end the whole process, and I'm hoping I can do it in under an hour. So as I highlighted in the last video, for the UK market, the best approach was a high flyer approach. High QM over 8 years returned 385%, an annualized rate of 22%. And what I used to work out that data was the Stockopedia website. And on here, you go to the browse section, you can see I'm on a UK focus, and I can see the top QM ranks. And what Stockopedia have done, just for a bit of background, is that they use screening rules to select a portfolio of 25 stocks every quarter that fulfill these criteria. So it's any stock over 90% and that has a market cap greater than 10 million. And then they pick the top 25 stocks each quarter, buy them, hold them for 3 months, and then repeat the process in 3 months' time, selecting the top 25 stocks. And as you can see for the graph, over the course of nearly 8 years, it's returned close to 400%. So the starting point for the whole process is this area. Let's check the time. It's 12:35. So here we go. I'm going in. I'm going to copy this screen and I'm going to give it a name. And I'm going to call it UK top QM rank greater than 400 million. I'm looking for a market cap greater than, so I want the size of the company to be more than 400 million, because I know that the Freetrade Plus platform, the Freetrade platform that I'm going to buy on, only allows me to buy medium-sized companies, and that's the limit. And by putting this filter into this screen, it'll save me some time. And I'm also going to exclude a group of shares called collective investments, which is basically a set of stocks and shares pulled together into a portfolio by a financial analyst and then sold on again. But we're already doing that. We're building our own portfolios. So I don't really want to invest in companies that are doing the same thing as us. So I'm going to exclude them, and I'll show you how I do that now. So here's my copy of the screen, and I need to change a few things. So I go into here. So the first rule is the QM rank is greater than 90. The market cap is greater than 10 million. Well, I'm going to change that to be greater than 400 million. I'm going to add a new rule. And the new rule is I'm looking for a particular industry group. So I add this rule, and I'm going to say I want to exclude any businesses that are in the industry group called collective investments. And you can see the results have dropped down to 95. Okay, so what I'm also going to do is I'm going to customize this table. Okay, that's already done. So I've got the market cap, the stock rank, industry group, sector, and QM rank. That's fine, actually. That's all I need. And I'm going to save that now. So this table is ordered by QM rank because we're not interested in stock rank today. We want QM rank. But you can also see the stock rank is here. And now what I'm going to do is I'm going to download this data because I need to manipulate it a bit. Okay, so I'm going to copy the data to a clipboard. And I'm going to go into an Excel spreadsheet. And I'm just going to paste it in. Okay, so now what I've got to do is work out if my platform, the broker that I'm going to buy these stocks through, supports them. So this is a bit tedious now. What I've got here is a version of this is my portfolio software linked to my computer, so I can actually go through and search now. What am I looking for? Discover, that's right. Sorry, I don't use this very often. So this is going to be a bit tedious, but basically what I'm going to do is go Royal Mail Group. And you'll see here that Royal Mail Group is available on the Freetrade basic platform, but physical gold is only available on the plus. So this is what I'm looking for. I'm going to go through and pick out stocks which I'm allowed to buy on the Freetrade basic account. And what I do is if I can buy them, is I highlight them in green and I just go through. CMCX is plus, so I can't buy that one. That's only available on plus, so I'm going to put it like that for Expo. Notice here I've searched for MDMG and it's not listed at all. This is a US stock, this is a US stock, so that is not available at all on the Freetrade platform. So there you go, there's our 20. Okay, so what I'm going to do now is I'm going to take them out of this spreadsheet. Okay, so there's our candidates. We can order this by market cap if we wanted to. So we've got some small companies, more mid-size up to larger companies. QM rank ranging from 100 down to 97. Just as a matter of interest, the stock rank goes from 73 to 100. We've got some mining companies, consumer cyclical type things, media and publishing, specialty retailers, a consumer defensive in terms of a wide provider, some financial companies, a healthcare provider for dogs and pets, I think, some industrials, and some technology companies. So the next stage now is we need to work out how to allocate them. And so the way I do that is I've provided an allocation spreadsheet. I'll provide a link to this in the description below, but this is a way of working out how to how much you need to spend on each stock. So the first thing you do with the allocation spreadsheet is you make a copy. So I shall call this UK HighFlyers Freetrade June 2021. Okay, and if you're not sure, if you haven't seen this allocation spreadsheet before, I'm going to provide a link up above in the top corner to the previous allocation video I did, which shows you where I go through a bit more detail about how to use this, but I'll whip through it quickly as we go. So basically what I'm going to do is I'm just going to copy these things here, which are called the tickers, and I'm going to paste them here. And the spreadsheet will load up the name of the company, its current price. So the first thing you need to do with this is work out how much you're going to spend. And for this portfolio, I'm going to spend £4,000. And then what it does is it works out how much that is per stock, and that's just under £200. And the reason it's just under £200 is because there'll be a stamp duty, some tax you have to pay on each transaction for the majority of these stocks. But the tricky thing is that sometimes a company's share price doesn't accurately divide into, in this case, £199. So at the moment, it's tried to work out the best way to purchase these stocks with the number of stocks we need to, the number of shares we need to buy in each stock. But that's only amounting to £3,773. So here's the instructions. Make a copy of this spreadsheet, copy the 20 tickers, adjust the funds available, which I have to 4,000, calculate the targets pen per stock, which is here, £200, sort the table by descending share price column C. So I go here and I go largest. So the most expensive stock is Spirax, which is £128 a stock. And considering we're spending 200, so if we bought two of those stocks, it would be up to £250. So we need to make a decision as to what we think is the best use of our funds, really, in terms of trying to get to £4,000. So what am I going to do here? The ones highlighted in dark are the ones furthest away from the £200. So I'm going to possibly look at spending. Is it better to be £70 under or £57 over? So I'm going to go £57 over. This is the next one I want to adjust here because it's the furthest away. So that's only taking it to £213. If I was to increase this one to 4, I would blow my budget. So I can't do that. So I'm going to undo that. I've still got £41 left to spend. So I'm going to come down and look at some of these now. So I'm going to change that to 11. 12. Getting really close now. I've only got £4 left. I can't buy this one because it's £15. So the one I'm probably looking at now is this one down here. So I could change it to 152. Oops. 152. 153. That's pretty good. £3,999.51. So that's based on the price that is being recovered here. But when we actually go to purchase these stocks, the price we're being offered might be a little bit different. So what we do here is we fill in this field as we go through the buying process. So let's go through the buying process now. Okay, so, and I'm going to start with the most expensive stock, which is Spirax SPX. So what you do is you come and select the stock, you select buy, I know I need to spend around £260. So 260, let's see how many stocks I can get for that. And it says you can buy 2 of those. So I'm going to review the order. And it's saying the total cost is 256.98. So we got it a bit cheaper. So I'm going to confirm the buy. 256.98. Ah, I just hit a snag. Okay, the snag I've hit is that I have to put my thumbprint in every time I buy. So what I'm going to have to do is I'm going to record both streams separately and put them together so you can see what I'm doing. So I'm just going through the buying process on my phone. That was actually completed for £257.18. So it's bang on what we thought it would be. Okay, I've just realised I've made a mistake. That S3 is a plus share, so I can't buy that. So I just need to find another one. And that other one is probably going to be Atalaya Mining. So there we are, we're done. We have bought £4,000 worth of shares. The time is now 1:14. Apologies, there was a bit of a technical problem during that buying process. I was able to use my computer to link to my mobile phone to search for the stocks on the Freetrade app. But when I came to buy them, it required my thumbprint, which completely sabotaged the whole process. So what I've done is I've switched back to the mobile phone, taken a screen recording, and I've uploaded that as you saw. So apologies for any confusion. And I had to blur out some of the notifications that I wasn't quite expecting. Hopefully I'll make sure that's a bit better for next time. Regardless of the technical difficulties, that's how easy it is to build a factor-based portfolio. We did that in under 40 minutes. So let's just review what we've done today. I've decided to invest £4,000 in the UK stock market. I use Stockopedia tools to help me identify that a high flyer approach, which combines high quality and high momentum, works really well in the UK market. I took a screen and modified it slightly to exclude very small companies, which the Freetrade platform doesn't support, and I also excluded collective investments. I took the list of stocks that were returned and just did a quick sanity check on them to see if they were available through the Freetrade platform. I then passed 20 of those stocks into an allocation spreadsheet, which helped me work out how to chop up my funds and how many of each of individual company I needed to buy. And then I went through the purchasing process. All of that took 35 to 40 minutes and probably would have been a bit quicker if I didn't have some technical issues. It's that easy. I bought the stocks based on their QM rank, not on whether I knew the company, not whether I knew the CEO. I completely trusted in the QM rank. I'll produce a strategy document for this portfolio, which I'll link to down below too, so you can see my rationale for choosing this approach. As I did with the stock rank portfolio, I'll also explore whether it's better to hold the holdings for a year, rebalance in 6 months, or rebalance quarterly. And I'll produce videos based around that so you can see how they perform. If you think that you could benefit from the service that Stockopedia offers, down below in the description there's a referral link. If you follow that link and you sign up for an annual plan with Stockopedia, you will receive a 25% discount on your first year's annual plan. And that comes with a 14-day free trial and a 30-day money-back guarantee. And because it's a referral link, if you use that and buy an annual plan, I'll also get a fee, which helps to support the channel and helps me grow and produce content that is hopefully helpful and useful to you. Also, if you're interested in a Freetrade account, please check out the referral link in the description below. If you follow the link and sign up for an account and fund it, then you'll receive a free share worth between £3 and £200. And also I'll get a free share worth between £3 and £200. And of the handful of shares that I've received so far from other people signing up, thank you very much by the way, I've received shares that are worth £3, £5, but I've also received one that's worth £50. So who knows, it's a bit of a lucky dip and it's better than a poke in the eye. If you have any questions or comments, please just add them to the comments below and I'll do my absolute best to answer them as clearly as I can. But that's it for today's video. Thanks for watching right to the end, and I'll see you again next time. Bye.